what we're really trying to do and what the ultimate vision here is to really start mixing the worlds of finance and sports betting and taking all these kind of cool products that have come out through DeFi or traditional finance and combining them with concepts from sports betting.
Hey everybody, Tanner here with WAGMI Ventures. On today's podcast, we have Neil Zhang, co-founder of Frontrunner. For anyone who's new, this is the WAGMI Ventures podcast where we do company snapshots with interesting founders from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Neil from Frontrunner. All right, Neil, how's it going today?
Going well. How about yourself, Tanner?
Doing really well. So let's jump in really quick. For the listeners, could you just kind of talk a little bit about your story and the origin of Frontrunner?
Yeah, absolutely. So the story of Frontrunner and, the story of myself kind of begins in middle school for myself. That's when I read my first book on poker, actually recommended by my dad, since I was playing with my friends and he didn't want me to lose. And so I started getting into poker. And from there, a natural transition was actually fantasy sports as well with kind of that same group of friends. From there in high school, started learning more about statistics because I was mad that I was losing to my friends in, poker and fantasy sports. And so from there really opened up the doors into understanding that, fantasy sports, poker, they're all in kind of the same genre of what I like to call, like skill-based gambling, if you want to call it. Ways where you have ways to impact the outcome, but there are still some elements of luck involved. So in college is really when I started diving deeper into fantasy sports. I really got into daily fantasy sports as well, especially in the early days of FanDuel and DraftKings. And the natural extension from there was ultimately sports betting and eventually stock options, stock trading, and even crypto kind of from there. Actually, in 2013 was when I bought my first couple, Bitcoins, not really knowing what they were. I just knew that they were a way that I could play online poker on some offshore books once everything was banned in the US. And so didn't really have a grasp of cryptocurrency at the time, but at least knew that there were these digital currencies that existed that really allowed people to kind of do things on the internet that weren't otherwise possible. Fast forward a couple more years through college, and I actually placed a bet on the San Francisco 49ers to win the Super Bowl in the 2019 NFL season before the season started.
Nice.
I thought they had some great value. And yeah, as it turns out, if you know the NFL, that was the year they actually made the Super Bowl against the Chiefs. So I was super excited about my bet, really excited that I had this insight that led to a favorable betting position. But I noticed that through the sports betting products that kind of existed, that I was in a rough spot kind of regardless. Either I would win that, they would win that last game and I would win a lot of money, or they'd lose and I'd be left with nothing. The only real ways for me to guarantee that I won money from this, really good bet would have been to put a bunch of additional capital into the platform and hedge by betting on the other side, or to basically sell my bet directly back to the sportsbook, cash out, so to speak, at about 60 to 70% of the value of the bet at that point. And that kind of got me thinking, why is this the way that sports betting is? Sportsbooks control what you can bet on, when you can bet on it, what odds you get, who's allowed to bet where, and even when you get paid out in any given kind of facet. And as someone who was already kind of into stock trading and crypto trading at this point, it made me think, why isn't there kind of an open market for trading sports bets like there are for other kind of financial assets? And so that's ultimately the core concept that kind of got us thinking about Frontrunner when we started working on it in 2019 as just a group of friends. Starting in 2020, we started working on it basically more full-time since there was nothing else to do during COVID. And come 2021, we got into an accelerator program, which really kicked us off working on this full-time in earnest.
Love it. So one of my favorite things with Frontrunner especially is it's the possibilities are pretty crazy, right? Like once it really gets going and like the vision of 5 years down the road is pretty amazing. Could you talk a little bit about where you're seeing this go? If, say everything goes right 5 years from now, what's the kind of stuff people could expect to be able to do on Frontrunner?
Yeah. So while we're starting with the basics, money line style bets in kind of an exchange stock market format, what we're really trying to do and what the ultimate vision here is to really start mixing the worlds of finance and sports betting and taking all these kind of cool products that have come out through DeFi or traditional finance and combining them with concepts from sports betting. While picking a winner of a game is kind of the default case, why aren't there things like, perpetuals for teams so you can invest in a team basically over time? Why aren't there swaps between teams based on wins or based on ticket sales? There's kind of a lot of secondary products we think that are not only interesting to retail investors, but also potentially institutional investors or institutional kind of players around the space that can hedge risk or kind of get value out of their knowledge or vision of what the sports industry are. So while again, the initial kind of sports betting use case is, good and fun for the retail investors, we really think that if done right, this can be much more of an institutional space where trading institutions, prop trading firms could really get in and start trading different assets around the sports space. And you're already kind of seeing this. Our biggest investor in our seed round, Susquehanna, actually was one of the first kind of prop trading firms to realize that sports betting is just another kind of market like anything else. And so for us, it's about really taking that concept and pushing it to the next level and really seeing what it means to make financial products out of kind of the sports and esports realms.
Yeah, that's super cool. I mean, take someone like me. I'm like a moderate Dallas Cowboys fan, right? So maybe just spell out for people a little more, because you mentioned it's kind of the two audiences, right? It's the retail world, and then as things evolve, kind of the more institutional world. Say I play in both, right? Like say I have an interest in betting personally as a retail guy, right? Just making kind of bets on the Cowboys, right? And then, say I also happen to run some fund. This is a very contrived example, but for the Cowboys specifically, like what are the kinds of what I guess I'm curious to dive more into those examples you gave, because you gave some examples. I'm just curious more, how does that work? What does it look like?
Yeah, of course. So I'll start with the retail side, then go to the institutional side. On the retail side, if I'm a big Dallas Cowboys fan, which for the record I'm not, but I'm okay with you being one.
Thank you.
Yeah, I'm a Washington or Commanders fan now. I'm still getting used to the name, so nice to have some rivalry here.
We don't have to talk about it.
Yeah, exactly. We'll just move on. So for a Cowboys fan, the kind of default case is, I can buy shares of the Cowboys at the beginning of the season. And rather than needing to hold on to the bet until the end of the season, say the Cowboys were to start, 7-0. People really believe that they're going to be a contender for the Super Bowl this year. I can then sell my shares high or, buy more if they start the season slow to really make sure that at any given moment in the season, I can express my opinions whether the team is undervalued or overvalued at any given time. Additionally from that, I could buy shares of Dak Prescott MVP or things like that. Shares that will fluctuate in value over the course of the season based on his kind of a performance, whether he starts hot or starts cold. You'll have opportunities to buy low or sell high, or, the opposite, kind of no matter what your opinions are at any given time. You don't need to worry about bets being taken down, right? Once you have the shares, just like on the stock market, you're free to trade as long as the markets are open and until the result is ultimately determined. Again, compared to traditional sports betting, we're trying to give retail investors as much freedom and as much, to the second ability to act upon their opinions in a moment compared to normal sports books. On top of that, one thing that our platform does really well for retail investors is give them an idea of exactly how much they're risking and how much they stand to win at any given time. The way that shares work on our platform, which retail investors on our testnet have been really, positively responding to, is the fact that shares on our platform fluctuate between 0 cents and 100 cents, depending on how likely the market views that outcome is to happen. And that's because shares of correct outcomes pay out $1 and shares of incorrect outcomes pay out nothing. So say the Dallas Cowboys are priced at, 35 cents to win the Super Bowl this year. That reflects in a 35% chance that the Cowboys are actually going to win the Super Bowl this year. There's no more complicated conversions of plus 300, minus 550, plus 1200 to kind of figure out what your odds actually mean. You know exactly what the spread is between, what your beliefs are and the market, and then can act on it a little bit more accurately than needing to kind of have all this baseline knowledge to understand what you're doing and when you're doing it. On top of that, say I think that, the Cowboys are slightly overvalued now, I can place limit orders rather than market orders to set a price that I'm willing to buy into the Cowboys with, rather than needing to basically just take whatever market price is available by a sportsbook at any given time. You can actually basically place these limit orders and basically place bets while you're sleeping, if you want to think about it that way, right? As soon as the price hits a certain point, you can then execute on those shares, which is a feature we think will be super powerful for investors, especially those who have, retail investors who have gone through Robinhood kind of understand what this all means already. It's just taking that concept and really putting it into sports betting where we think it makes sense as well.
Love it. This is super interesting. I mean, it seems like there's got to be, because you're bringing something that hasn't been able to exist really before, and there is a bit of a top-down element. I'm sure you're chatting with users and you're figuring out. I'm sure there's a lot of ways that the product's evolving, but in some ways it does seem like you're saying, look, we have these new possibilities. We're building this thing that is taking advantage of these new possibilities to create these new opportunities, and so I'm curious, like, what have some of the challenges been? I'm thinking of, like, I don't know, regulatory product challenges, otherwise, to building this thing when it is pretty, I hate to say prescriptive. I hope that doesn't come across pejorative, but it's saying like, here's a whole new world of things you can do that, we're seeing are possible now that maybe aren't broadly recognized or haven't been broadly recognized yet. But here's some great things you can do now.
Yeah, absolutely. I can start quickly with the regulatory side. It's a complex topic, and I think this is the case for a lot of different DeFi style products these days. We're currently in the process of filing ourselves basically as a gaming / sports betting product rather than a financial product. And so along with that, we're in the process of acquiring international gaming licenses that will give us kind of purview to operate in a lot of kind of the global landscape. Unfortunately, that global landscape does not currently include the U.S. just because, the U.S. kind of framework for gaming products is state-by-state legislation, and it's extremely expensive and pretty cumbersome to get started with. So Our goal is to get started in kind of the easier jurisdictions internationally, kind of find product market fit, get our product out there, learn from our users, make sure that we have a really locked-in product. And then, once we have more funding, kind of more proof, come back to the US, come back to, maybe even the UK, some of these countries that have stricter kind of purviews around kind of the regulatory side of products like ours. So at least in terms of the regulatory side, it's a work in progress. We have plenty of kind of green space in front of us to get started, get users, start testing the product. But some of the more developed markets are going to take some time for us to have kind of the bandwidth to get back to. So at least on that side, that's how we're appring it.
Yeah.
Sorry, what was sense.
Yeah. No, I was just curious. The other example or the other kind of category was product, but I mean, that is really interesting on the regulatory side too. I think that's something people would be curious about, and it makes a ton of sense, right? So I think, especially for our listeners, I think people have, a pretty good sense that these things will take time, right? Like you can't always just bombard brand new things into the market that, I mean, it's just the roadmap will inevitably be complicated, and I think it's just going to be interesting to listeners to hear how you guys specifically are navigating that.
Yeah, absolutely. I mean, I'm happy to talk about this on the product side as well. So what we've really observed from the early stages, right? We've done a couple different rounds of testing, and actually our Web3 testnet actually is officially open and live as of today. So anyone can kind of go out there and try out our testnet at this stage. But what we've really noticed is that it's really intuitive, and we've got a lot of positive feedback, especially from users that have done any sort of trading, retail trading at all, right? Whether you were a stock trader, a crypto trader, even people who have traded on StockX or, have kind of done some alternative asset type trading, the interface is super intuitive in a way that even current sports betting is not. Everyone kind of understands what the central limit order book represents. And even if they don't understand all of the mechanics, seeing the price of a given share of, say, the Yankees, people understand that, hey, like this seems undervalued, overvalued. I can buy the shares. They understand what it means when prices tick up and down. And that's actually something we found is super compelling, especially for our retail traders, right? Rather than, using a sports book, placing a bet, kind of putting your phone down and just watching the game and hoping for the best, users are actually keeping their devices open and watching the prices of their shares tick up and down over the course of a game, or even sometimes over the course of a season, right? That's kind of that Robinhood behavioral cycle that was super compelling in kind of the centralized finance world, but also we find is super compelling in our kind of decentralized sports exchange model as well. So these types of changes, we find that our product, currently resonates or is the most intuitive for users that have already been in the trading world. But our also kind of thesis behind this is that more and more there's more and more retail traders every day. The average person is becoming more and more aware of their options in terms of trading. And so that kind of macro growth in trading in general, we think really lends our product to be kind of in the right place at the right time. As these people realize that sports betting is another set of markets that they can kind of have fun with, especially with their fandom.
Yep, totally. And it does seem to, I mean, I hadn't considered this until you mentioned it earlier, but, taking a specific quarterback, I mean, it does seem to blend elements of fantasy. It blends element of traditional sports betting. I mean, there's, and elements that aren't probably in the market yet, really. I mean, it's just new possibilities. So I totally hear what you're saying, that it's going to, as the macro trend grows of people getting more involved in trading in general, they'll look to sports betting as a new avenue. But I think it's also going to be, especially just because I know just how intuitive Frontrunner is. I can imagine there's a whole world there too of people who are just kind of average Joe, loves to play fantasy with their friends, and then they see this and they say, "Oh, this is really interesting. We can really do some interesting stuff here too." I'm under the impression we can, and side note, we can cut this if I'm wrong.
Yeah, no problem. Yeah,
I remember there is there like a group pooling piece of this, like any kind of group pooling functionality, or I have this in my notes and I'm losing my mind from where I found that. But
no. That's great. It's actually something that is firmly on our roadmap, and I can actually talk a little bit about how we're building on Injective protocol. Actually, they just announced their $40 million, I think, Series A round today. So I don't know if that needs to go on the podcast or not, but it's good timing for some of this stuff. But they've actually built into their protocol that we're building on top of something called trading guilds, which basically allows users to each person with their own wallet put it into a pool and basically vote on what to do together as a trading guild, as they call it. We're coming up probably our own name, whether it's called Frontrunner Teams or something like that. But the macro trend around sports betting is that it's becoming more and more social, especially for younger sports bettors, right? It's not just about making money. It's about sharing how much you made or lost with your friends, or, betting together and riding or dying, as a group. And so that's something that we're definitely looking to add in the near future here, right? We want to have groups of friends, create their own hedge funds, right? We might have some large institutions market making for our platform, but why can't a group of friends say, hey, we think we can do better than, they are in the NFL. Let's pool our funds together and, take them for all they're worth. That's something we're definitely encouraging and are excited to do, down the line. In an ideal world, right, we kind of create a Wall Street bets for sports betting, us versus them type relationship, retail versus institution. That's the exact kind of relationship that we really hope to foster and, get people into further down the line. And it actually kind of exists in the centralized world right now. Betting syndicates already exist. They're basically grouping up betting against the sports books. It's a similar relationship but just through an exchange model rather than, just versus the bookie directly.
Yep. Yeah, that's super interesting. Since you mentioned Injective, this was actually something I was curious about. Was just curious about selection process. I mean, it seems like I don't know Injective super well, but it seems like kind of the perfect blockchain for you guys. So just curious what went into that decision, basically.
Yeah, absolutely. This is a question we get a lot. We were actually one of the first major teams to commit to building on top of Injective, and I think at this stage we remain the most well-funded using their protocol at this stage. So when we were looking into what protocol to basically build on, we kind of went through all the boilerplate ones, right? We talked to the Solana team, we talked to the Avalanche team, we talked to the Polygon team. We had already built products in the kind of EVM ecosystem, so we were familiar there. But our CTO as well wanted to actually do some digging into, in the past year to year and a half, what are some other protocols that have raised money that might be better fit for our use case? And from day one, what we believed was that we don't necessarily want to be the ones writing the L1 protocol. We don't want to be the ones really writing the smart contract layer for a central limit order book, which was probably the most important feature that we were looking for in our protocol. We were very sure, especially based on kind of learnings from Polymarket and some other decentralized prediction markets, that we didn't want to use AMMs. We wanted to use central limit order books. And so that immediately kind of helped cull the field a little bit, since, Avalanche and Polygon at the time didn't really have native central limit order books or protocols or companies that had already built easily extendable central limit order books for things like our purpose. So at that stage, we started experimenting with Solana, and our CTO, Brian, found the Injective team. And so, upon meeting the team, they were still on testnet. Their tech was really good. But what we really loved about them was that they were an L1 protocol built specifically for quickly spinning up decentralized exchanges of various types of derivatives. And in our minds, sports bets are just another type of derivative. A traditional moneyline bet is basically just a binary options contract. And so we really loved kind of their focus specifically on a single thing. They weren't building a protocol that was kind of for everyone, for every purpose. They were focused specifically on this one thing that was really important to us. And so after experimenting with Solana, after experimenting with Injective, we ultimately just realized that, hey, we're getting a lot more attention from the Injective team. They're building this specifically for us, and we have a lot more input into what we can kind of get done with them. And so from there, it was a pretty easy decision once we were able to kind of spin up a demo and make sure things were working. That was a pretty easy commitment for us early on. We weren't just one of hundreds of teams building on Solana, getting minimal attention, kind of figuring things out for ourselves. We were able to work directly with kind of the source of the team. They actually built us binary options contracts as a custom kind of feature to their smart contract within a month. Oh, wow. Once we were kind of getting ready for testnet. And this kind of cooperative, really, symbiotic relationship between the two of us has been really great. We much prefer to be maybe a big fish in a small pond rather than just another fish in a massive pond, kind of in that way. And the thing that really reinforces to us was that, with the Terra Luna ecosystem kind of going down in the last few months, a ton of developers in the Cosmos ecosystem have been coming to the Injective ecosystem. So our decision based on the tech was good, but now the ecosystem itself is becoming much more fully featured. There's fiat on-ramps coming. There's new wallet solutions coming. There's just so much more development in the space, especially now with the announcement of fundraising, that we were really excited to kind of see where the future is. The kind of other aspect of this that really made us love Injective was this idea of a multi-chain vision of ours long-term. When we were kind of spinning up Frontrunner from day one, we didn't want to necessarily commit ourselves to a single chain and kind of ride or die based on the success there. Us as co-founders, we've been investing in the space since, at latest, 2017. We've all invested in good stuff, bad stuff. And what we've basically seen is that the macro ecosystem of Web3 shifts pretty quickly. And to link yourself to a single chain is often risky because you just don't know what kind of things can affect a chain, bring it down at any given time. I mean, I think the Terra Luna breakdown really illustrates this pretty clearly. And so we were always looking at the Cosmos ecosystem and kind of their interoperability between chains and their ecosystem and eventually beyond. And so those types of things made us really, again, bullish on not only the Cosmos ecosystem, but Injective individually as well.
Got it. Yeah, that's a terrific breakdown. That makes a ton of sense. And it does seem like really the perfect fit for Frontrunner. So maybe shifting gears a little bit here, I'm curious, bear market past couple months, right? Like what's been different? What have you been doing with your team and your company just to kind of navigate the past, couple months really?
So, a couple different perspectives on this. First and foremost, we were very lucky to basically get our seed round done right before everything kind of started going downhill. So we're lucky to not have to be raising money kind of during this kind of down period. So we've just been focused on product and company. With our seed round being raised, or with the seed round we were raising, our goal was always to focus all the funding there on product development, company development, regulatory/legal development, and then, just basically getting our testnet product out there and starting to learn from our users ASAP. Luckily from us, because we haven't been looking for investment, we haven't been honestly hit too hard by the, bear market currently. Users are still, very excited to use our platform. It's testnet, so they don't even need to use real currency. So there hasn't been too much concern there. I will say that, some funds we were talking to have basically said like, hey, we'll just cut off conversations and come back later. But we really haven't been too directly affected. And a part of that also is that the Injective team, having raised money during this period as well, they've been really great in supporting us, right? They've been giving us great marketing advice. They've been connecting us with the right people. They've been amplifying our messaging. And so for us, there really hasn't been too much effect. And kind of the point on top of this, which has been, really helpful to us, is that from day one, we knew we weren't going to release with a token. We didn't want to just ICO and come out here and, put a token out there and start, basically farming token value. We really wanted to make sure that before we talked about token, and all of our investors were very aware of this, that we wanted to first make sure we had a product and a community that was worth supporting with decentralized governance and a token rather than just releasing the token from day one. I think had we been more gung-ho about releasing the token right away, there might be some more external pressures for us. But because we kind of kicked that can down the road, we always said it's going to be 9 to 12 months after our mainnet launch, the token will likely come more into focus. We've really not had a ton of external pressure. We've really just been allowed to focus purely on product development and then making sure the testnet is as successful as possible.
Yep, that makes a ton of sense. Super interesting. So maybe, one last question here on my end is really just general advice for Web3 founders and builders. It's, there's as evidence from this conversation, there's a lot of stuff probably beyond, I don't want to be like Web 2 versus Web 3 here, but there's a lot of moving parts to building in Web 3, right? And I'm just curious, any general advice if you take a step back and just kind of say like, okay, if I'm me 3 years ago, right? Like what's some stuff that I would have really appreciated knowing that I know now, but would have been great then?
Yeah. Well, first and foremost, doing diligence into the protocol you use is super important. We certainly wasted some time using Solana and some other things because we didn't totally understand the full context of what the block protocol meant and the different features of it. There was just so much noise in terms of some investors were just saying, oh, just go for Solana, right? This is what everyone's using, just go for it. Yeah. Don't just follow the crowds because something is hot. Do it because you understand the implications, or at least understand what you think the implications are, and think that it's the best decision for the company as a whole. There's just so much. I mean, I think especially in Web3, there is just so much exuberance around protocols. Once people kind of get dug in, often it's hard to remove them, kind of regardless of what facts are presented to them in some cases. And so just be a little bit more agnostic and try to be as objective as possible from day one. Because, you're going to get pulled in a lot of different directions if you just ask people what they think is best.
Yeah, definitely.
Yeah, separate from that, I mean, this is a thing in Web 2, but in Web 3, our CTO has been particularly diligent about this, but the whole idea of security and making sure that your platform is not only functional, but, is not easily exploitable is something that we're dead focused on in the testnet so much right now. And it's probably something that we've been thinking about it since day one, but it's emphasized even more than it is in Web 2. Just because there's so much unexplored stuff in Web 3, it's a lot harder to just take the boilerplate kind of security concerns and just, build it in. There has to be a lot more conscious thought put into what kind of exploits might exist, how people might try to game the system or mess up with things. Because the fact of the matter is that so many people in crypto are these types of people that are just trying to make money and trying to figure out how to break your system, just like in Web 2, but there's just way more exploits in Web 3. So it's something that I think needs to be put into focus at an earlier stage when building blockchain products rather than, traditional kind of centralized products where, in all honesty, AWS will take care of a lot of stuff for you, or, you can honestly blame them if something goes wrong if you're using their servers. So that's kind of another lesson, certainly, that we've learned. And then the kind of final side, and this is maybe more personal for myself as CEO, is, the way that you talk to investors, I found, is pretty different. When we were centralized, the pitch and the due diligence process was pretty different than when we crossed over officially into kind of the Web3 world. The things that people care about, there's a lot more technical diligence in some cases in the Web3 investment world side. And then there's also maybe different types of things that people care about. For example, we've been basically told at this point, and, I don't know if this is reflected from your experience even, that we basically want to try to raise our Series A before we go live on mainnet. While in the kind of traditional VC / investment world, it'd be wild to be raising a Series A before you have any sort of revenue generating product.
Right.
So that's just required a shift in terms of strategy and in terms of how I think about telling the story of the company and, basically raising money for us. But, these are just some of the observations in the year that we've been spending on this so far.
Yeah. Yep. Neil, thank you so much. I think this is one of our more fascinating conversations. I think the listeners are going to love it. For anyone listening, you can go to getfrontrunner.com and check out a little bit more. And Neil, thank you so much. Really, really love this time.
No, absolutely. Thank you so much for inviting me, Tanner. It's been a lot of fun.
All right. Take care.